much, Vincent and Ashar. I very much appreciate it when you said rubbish in, rubbish out. I think that was a very good a bridge to the next discussion that we have. It's not just a discussion, it's a workshop. So you can actually bring the theory that was just mentioned and the thoughts that were just scattered around in this conversation into a real workshop. So today with us, we have Markus Kirchberg, who will actually be the one providing this workshop. So Markus, if you can come up, then it's up to you. Markus, I think we can hear you, but not see you yet.
Yes, I still have my video and my screen sharing disallowed.
Okay, no problem. I'll give you 2 seconds.
Okay.
Here you go. Hello, good day, and enjoy the session. Let us work a little bit.
Okay. Okay, welcome everyone. You should be able to see my screen share now. Let me just set up everything on my side. Okay. Yeah, so it's a pleasure to have you all here, and really appreciate having me. So what I'm intending to do today is talk a bit about my experience in adopting RegTech solutions, and talking a bit through different approaches of how RegTech solutions can be adopted, and what are some typical challenges around this, in particular moving RegTech solutions into highly regulated environments. So before we get started, I'll give you a quick overview of what I'm planning to cover in the session. So for the first part, and that will be the main part of the presentation, I'm going to talk about RegTech adoption. What are different approaches that I've seen? In particular, I focus on approaches that I've been involved in firsthand. What are some of the respective challenges? And those challenges will be at a lot of different stages. It will be, as the initial discussion introduction mentioned, this will be really data related. How can we actually ensure that we get access to the right data? What kind of challenges are we going to face dealing with data, but we're also moving beyond technology and the data in itself. We are also going to talk a bit about how do we set up the right environment that can allow us to succeed, that can allow us to move beyond a basic proof of concept in order to have a better chance at making it into production. Similar a bit to what you see on the right-hand side here is we want to avoid falling into the pitfalls that just create patchwork solutions that have not been properly designed for scalable and sustainable use in those environments. And the main part of this presentation will be on the RegTech adoption side. For the second part, I'm going to focus a bit on something very related. I focus on what's called MLOps, so machine learning operations. How can recent technology trends, recent availability of tools that support productionization of data-driven and machine learning type solutions help to bridge the gap and address some of the challenges that we see when moving an initial proof of concept through the various stages into production. And I'm starting off in the second part, focusing a bit on DevOps and just set a playing field of everyone being familiar with what DevOps is and how DevOps has really broken into a lot of different industries over the last couple of years, help with automation, help to elevate a lot of digital risks and brought a different type of certainty to deploying software solutions. We're focusing there quite a bit on how are machine learning solutions different from traditional software solutions, and how does the area of DevOps really has to evolve and has been evolving in order to cater successfully for those differences, and what you have to be aware of when you actually move machine learning solutions into production. And then I wrap up towards the end, discuss some more recent challenges and opportunities Some of those points were already raised in earlier discussions during the day. I will touch a bit on changes on the data privacy side of things and how this has affected how a lot of solutions can or must now be delivered. I talk a bit about a lot of the discussions in AI ethics or machine learning ethics around that. There's a lot of conversations happening in the space, but I will take a bit more of a pragmatic, bit more of a practitioner's view of what is really required to move the needle forward in the space beyond just discussion papers being pushed out by government agencies, regulators, and standardization bodies, and so on. And then I finish off talking a bit about an emerging area that will take advantage of a different thinking that I can see personally, in particular in the European space, in how regulators approach the need for collaboration, and how tool support has been catching up in order to provide a different breed of technology, which is called privacy-preserving analytics or privacy-preserving machine learning capabilities, and what are really the opportunities in this space. Okay, and in case there are any questions, feel free to use the Q&A tool, raise your hand. I will have some time allocated at the end of each of those parts to address some of the questions if there are any. Okay, so now that we know what we want to cover, let me give you a quick introduction about myself and set a bit the scene of what I've been doing over the last 7-8 years, in particular in the space of taking RegTech and SubTech supervisory technology solutions and moving them into production, so that you get also a bit of a background of where some of those key points, key challenges, and key approaches that I'm going to discuss, where they're really coming from, that you can set a bit of context. So my background, I'm born and raised over in Europe and Germany, have spent 7 years down under in New Zealand, and now I'm located out of Singapore for the last 13 years. Have a strong technology background, have done my master's and my PhD in the data transaction processing area, and worked in particular innovation, data and technology-driven domains for the past 20 years, dealing with a lot of platforms, platform development, machine learning, and AI type solutions. Most relevant to this workshop is the experience that I've gained over the last 8 to 9 years, since I'm really working in the financial services space, as well as prior activities where I have had some exposure into other regulated areas, including healthcare, supply chain management, and different type of transportation efforts as well. So for the last 8 years, I've been very involved in the financial services space, in particular in the payment space, in particular dealing with different types of financial crime. And I'll give you some examples on the next slide. And I'm currently running a startup called Wismut Labs, which is a small startup I'm running with a handful of people here out of Singapore, where we are helping regional financial institutions, fintech players, and other technology players to get their head around technology trends, technology innovation. And we help to develop, in particular, customized RegTech and SubTech solutions, and provide education in the space RegTech and SubTech in terms of running certification programs. So what gives me authority really to talk about RegTech adoption? It's what's depicted here on this slide. It's a summary of some of the projects that I've been involved in firsthand delivering over the last 7 to 8 years since I'm in this domain. And I'm not going to go into details for each of those projects at this stage. I just want to point out a bit the breadth and some of the different types of approaches that you already see on this slide, because when we talk RegTech adoption approaches, we will come back to some of those again. So it really talks about taking advantage of the availability of vast amounts of data in order to proactively detect data breaches. So that's something that happened in the 2013-2014 timeframe over in the US, when there was a sudden spike in data breaches that affected a lot of players. In particular, at the time, it was really point of sales kind of breaches. Why more recently we see with the shift of commerce to digital, a lot of the data breaches actually happen at different points of attack, more on websites, checkout pages. If you think of approaches like digital skimming and so on. A lot of the work that I've done is really in the negative space of payments. In addition to data breaches, spent a lot of time developing and delivering solutions in the payments fraud space. A lot of different types of payments: card payments, e-wallets, e-commerce, point of sales, and QR code payments. Really developing either novel capabilities or modernizing existing capabilities. Modernizing in terms of supplementing more traditional approaches of finding negative activities. So supplementing rule-based systems with data-driven solutions, network science-driven solutions, and then more recently, of course, also machine learning-driven solutions. And this payment space is really something that drove and helped to create trust and excitement around using machine learning for tackling some of the problems that the payment ecosystem has with fraud and continues to have. There was a lot of success cases, and you see a lot of startups, a lot of RegTechs being active in this space. And I'm going to, throughout my talk, take a few of those examples from this time developing those solutions and show you some of the challenges that we actually faced in moving some of the early promising successes that we had in proof of concepts, really moving them into production, and what one has to be aware of. And this very nicely translates to a different different breed of technologies that I've been focusing on more recently. More recently, I'm focusing in a new domain that is really starting to also carving itself out from this larger fintech umbrella, similar how RegTech has now managed to stand on its own. SupTech, so supervisory technology, is on the same pathway, which is a term that has been going around since about 2 years. And you see a lot of solutions in market conduct, trade surveillance, data collection, data harmonization, data analytics space for micro and macro economic use cases being developed in this space. And some of the successes that I had in the past developing fraud-based solutions, they translate in surprising ways also in this different area, really dealing with getting a handle of suspicious activities, really dealing with the vast amount of transactions, the vast amount of alerts that are being raised in the space. And if you're familiar with the recent FinCEN data leak, you've already you should be familiar with that there are hundreds of millions of those alerts are being raised, and the current approaches that are either rules-based or often involve some form of manual checking are nowhere near having the ability to catch up with the challenges in this space. And I'm going to talk a bit about some of the underlying challenges that are very similar across those different efforts as well. And the last part that I just briefly want to mention is I'm also involved in doing a lot of RegTech certification. So there's a lot of use cases that I have not primarily worked in that I'm also very deeply familiar with, in particular regulatory reporting requirements and how the landscape in this field is actually changing. So I'm running a certification program in the RegTech space here locally in Singapore, which is a 12-day program going very deep through a lot of the different approaches and tools. Okay, so let's get started with the main part of the talk. Before we dive into RegTech adoption, I just want to make sure we set the level playing field. And I have a couple of slides where I just go through some of the RegTech basics. I will browse through some of this rather quickly. That's just a few points that I want to highlight that are important for some of the subsequent comments that I'm going to make. Okay, so we all know what RegTech is about, what the key market segments are, what is the potential, what is the growth prospects, and other talks have mentioned this, and other discussions have mentioned this already earlier. Yeah. So one of the key changes and one of the key focus areas that I'm going to have today is how can we take advantage of those key technologies that are driving technology companies, fintechs, and the RegTechs in order to build better solutions and deliver them into large regulated entities. And those solutions that I'm thinking about and talking about today, they're usually driven on machine learning. You will not have me use the word AI so much because as an actual matter of fact, most of the solutions that we officially label as AI today are really machine learning or data-driven solutions. So I try to use the more appropriate terms. The term AI will creep in here and there, but it's not something that I will focus on heavily. Other advancements that have been made over the last couple of years have really changed the way natural language processing is taking place. If you think about the ability of chatbots that we have today, really digitizing documentation and understanding the context and the content that is due to the advancements driven via machine learning in the natural language processing area. And then as the previous talk in this previous session also alluded a bit, blockchain, distributed ledger technology, and first and foremost, the area of big data, which is now around since and matured in most of the financial institutions in most of the financial services domains and other heavily regulated areas. So some of the recent key trends that can be observed and that I'm going to have a few points for discussion items on later are also really related here to what is mentioned under this box. Yes, RegTech is always motivated with the increased cost of compliance and helping to reduce the cost, the impact, and the team sizes that compliance teams now has. And one of the key pain points here is really the regulatory reporting space in this. But you see a lot of changes coming this. But in addition to this, a lot of changes really are also, as the RegTech space is requiring really getting traction, then the focus on what RegTech is delivering and the way it's being delivered also changes. So it's not just purely having a RegTech solution. It's the focus also now starts to shift more of having excellence in terms of the RegTech solutions that are being delivered. So dealing with large amounts of transactions, large amounts of traffic, dealing with near real-time or actual real-time use cases. And there's a lot of changes in the way applications have to be built in order to cater for this. And this is one of the key challenges that we actually see a bit later when we actually move from a proof of concept, which usually does not cater for real-time or really solutions at scale, that just proves that something is feasible. How can we now then take this to move it into areas where scalability, where real-time or near real-time actually matters? What are some of the key concerns that we have to think about? And then another trend that I'm also going to briefly talk about, and I'll give you a bit of an overview later on how this area has evolved, is really the area of regulatory sandboxes. So how are actually regulators trying to encourage RegTechs to get their solutions verified, validated, certified, so to get build some form of reputation, and to give them some form of test bed that once they start to engage with financial institutions, that they're not going to fall on the nose in terms of dealing with a very heavily regulated environment dominated by legacy systems that most of the startups, the fintechs, the RegTechs, subtechs are not necessarily aware of or have so much working experience in. And there's a lot of different approaches to sandboxes where we'll give you a very high-level overview towards the end of the first part. And the other thing, what is a key trend, and that has really been accelerated over the last couple of months, is really that the barrier of entry for software as a service vendors is starting to go away, that financial institutions start to become more willing to utilize externally deployed solutions, for instance, cloud-based software as a service solutions. Why this has been the case, and I'll give some reference to this in a couple of minutes. In the payment space, from early on, you can now see this in different types of areas. In particular, the financial institutions, and this is very much true especially in Southeast Asia, are now starting to think about becoming cloud first or cloud native entities, which changes not just the way they operate, but also the way they think about moving some of their primary data assets out of data silos, out of on-premise deployments, which will make RegTech adoption much easier moving forward. But it's still we're still a long way away from that. Okay. So RegTech use cases are plenty, and so this is from a survey that was published a bit over a year ago. What are the key RegTech use cases? And one of the key points is really here is RegTech use cases have always focused on data-driven solutions. It's one of the top number of segments here in this ranking. There's a lot of negative use cases that you can see here, dealing with fraud, dealing with transaction monitoring, transaction surveillance, which reflects that there were a lot of early successes in this area. As I mentioned before, in particular, dealing with payments fraud, dealing with filtering of suspicious activities has been always a key activity that had very early wins in applying machine learning data-driven solutions. What you can also see is, and there was I think an earlier session about this, is there's a new area of kind of tech, legal tech emerging, where really machine executable regulation and legislation and regulatory gap analysis are being driven by. So this is something that is supplementing some of the RegTech solutions. And there's quite a bit of interest in this area in itself. In addition to one of the rising stars in the space, which is called SupTech, supervisory technology, which, as I earlier mentioned, is focused again on data-driven solutions, in particular for ensuring market conduct and dealing with market surveillance, market supervision. So what are some of the RegTech challenges? And this is really very broad, just throwing a few challenges out. And we will see later on when we go through some of the approaches that I've been experiencing and executing successfully, is you will see some of those coming again. In particular, we'll focus on those later on that are marked here in bold. So what are some of the key challenges? You will see there's a lot of it not related to the actual problem we're trying to solve, not related to necessarily the data we're going to use or the machine learning approach we're trying to put in place. There's a lot of challenges that are brought in through other avenues. May it be the mentality, really having a more traditional environment, financial institutions, for instance, work with a more forward-thinking, a more agile, a more flexible fintech or RegTech. And bridging some of those gaps, which is also here depicted on the right-hand side, is really related also to the mentality, to the mindset, the different way of how work is being conducted, how risk-averse a particular party in this is. In order to make RegTech solutions work in financial institutions, similar to fintech and subtech approaches, there needs to be some form of a synergy. We need to be able to create win-win situations and have some form of confidence that those natural gaps that we see can be bridged. So mentality is definitely one of the key concerns, dealing with third-party risk. And in particular, data-driven solutions introduce a lot of different types of risks financial institutions traditionally have never really concern themselves with so much. Their financial institutions often are driven by enterprise-grade solutions. Most of the modern data and machine learning-based solutions are open source driven. The open source domain creates a lot of different challenges for the IT teams, as well as for compliance risk assessment. And I'm going to dive a bit in this further. And this goes beyond just the compliance, the risk assessment, and the digital risk side. This also goes into legal and some other areas. resources, having access to the type of resources that is required to build data-driven solutions, machine learning solutions. Some type of machine learning solutions require accelerated hardware, GPUs, for instance. Since a lot of regulated entities are not so forward thinking of not moving very eagerly into approaching a new technology delivery approaches like cloud computing. There's a lot of concerns, a lot of risk around this, and it has to do with where some of the primary data sources have to reside, where they're willing to be located in, and how privacy PII information can be stored, can be processed, and how certain guarantees, certain assurances around this can be built. And we're talking a bit about this and in the next section. And then, of course, technology-related concerns, the quality of the data, the difficulty interoperating with legacy systems is, of course, a key focus that we are also going to address. So let's jump into the first part, RegTech adoption. Let's see what are some of the approaches, some of the challenges, and what are some ways to overcome them. So first up, here there are different types of RegTech solutions that can be delivered, and they are often assessed in terms of what is the complexity in order to make the solution work versus what is the value a certain business can derive from it. And that's often also informs or forms in how willing is a regulated entity to work with a startup. And from my experience, the sweet spot at the current time is really here in the center of this graph. When there is medium complexity and medium business value, while there are still a lot of challenges that are currently unresolved, which I'll discuss a bit more in the third part, where certain high value, high complexity use cases, for instance, getting a better handle of money laundering, figuring out how can we identify an ultimate beneficial owner behind financial activities. Those are not solutions that can necessarily be tackled by data, technology, or forward-thinking financial institutions alone. There are some key changes that have to happen within how financial institutions work together, really the collaboration side of things. How are we able to exchange information, valuable information? Money laundering is never be able to be solved by a single entity because there are huge networks of information, huge networks of institutions involved in those negative activities. In order to move the needle forward in those areas here on the top right, there's still other transformations that have to happen before we really see big successes in this. And there's a lot of positive signs I see in this space, but we are not really there yet. And if I have a bit of time at the end, I can refer to some of those changes that are particular coming out of Europe in the space of trying to get a different handle, using a different breed of technologies, using different collaboration approaches, with a different enforcement regime being put out by the European Central Regulator. So the key questions that have to be asked here on the business side of things: what value does it bring? And then on the complexity side, what constraints for the implementation of the use case to exist? And the value really relates to risk coverage, operational performance. How much value does it bring to our actual clients? How much does it improve customer experience or impact the customer experience? And there's both concerns. For instance, a lot of the negative activities, if you just think about payments fraud, how much do you want to involve a consumer in the fraud fighting process? which at the moment it's still very heavily involved. We have to provide a lot of supplementary information in order to have a successful checkout, to have a successful payment experience. And there's a lot of thinking about how can we remove some of those pain points in order to drive success. Of course, we can fight more fraud if we involve the consumer even more, but that means also we are affecting the conversion rate of checkouts negatively, which is not creating business value. So there has to be also be a trade-off in terms of what can be done and what really is feasible to be done, even in terms of the business value. It's very similar from a complexity point of view. And I already mentioned that the data-driven machine learning solutions uses a different breed of software, of tools that typically come from the open source stack, and that creates different complexities and legal challenges. For instance, have a financial institution even an opinion of which open source licenses it considers safe to use? That doesn't understand the complexities around data availability from within the organization, across the organization, in particular in terms of more recent developments, more and more jurisdictions creating stricter data localization requirements, more stricter data privacy regimes, and so on. And then really the technology maturity is the technology mature enough, efficient enough for us to run. And there have been a lot of use cases where during the development process, for instance, there are a few famous KYC use cases, trying to be early on the blockchain use case, and then figuring out is, yes, we could create certain business value, but the complexities and the cost of running this are still still too big, so that some of those early approaches have actually been abandoned or at least put on hold. And then how do we actually deal with change management in transforming more traditional financial institutions in something that is more of a technology company that can actually move faster, be more agile, more adaptive. Okay, so adopting RegTech solutions. There are some common preconditions that have to be in place in order for data and machine learning driven solutions to be considered feasible. What are some of those preconditions? And typically, one of the preconditions is really in having access to the data and to the right data. In particular, having some assurance of data consistency, having data available in a structured representation, and having data not just available, but also accessible. At that point, we will touch on a few more times that there are certain types of data, even though they might be available for different commercial or competitive reasons or confidentiality reasons, it might actually not be accessible. And we have to take a different approach in order to build a RegTech solution around it. That's a particular use case we're covering in this case that I happen to see a lot over the last couple of years, in particular in the market surveillance space. So having access to the data and having modern IT systems, having an ability to interoperate. So how can we evolve or replace legacy systems with more modern systems that are being built for exchanging data much more easily, much more seamlessly? So that really means that a digital transformation process is typically a precursor for data-driven machine learning type of solutions being able to be beneficial to a regulated entity. And this is also confirmed here by a business survey that was done by Accenture, published 2018, that 69% of bank executives said that the cost of reworking legacy system typically hinders the ability to respond to market change. And this has a lot of impact also of how data-driven solutions, which are enabling a quick response to changing conditions, changing parameters, can actually effectively be deployed. So data availability and accessibility, as well as maturing digital transformation process, are typically precursors for successful RegTech adoption. So now, what are some approaches for adopting RegTech solutions? And I put this into 5 different categories here. The first two API-based usage of RegTech solutions, so a software as a service model, and then deploy off-the-shelf RegTech solutions, for instance, in a licensing model. Often tech gets, when you think about the graph I showed you before, low complexity, low business value. So those are very well understood problems where there are very well-defined solutions that can just be bought and deployed off the shelf, where there are no critical data assets being involved, for instance, to interact with a cloud-based solution. So there are quite a lot of those solutions in the place, but this is not what I want to really focus on. What I want to focus on is moving more into this mid-segment of increased complexity, increased business value. How can we build and deliver RegTech solutions in this space? And typically, this requires some form of customization. Those are not off-the-shelf solutions. So customizing RegTech solutions is a typical approach. And on the next slide, I give you a bit of different flows, different types of approaches of how this can be done. Something else that you see a lot is innovation schemes and innovation initiatives. Innovation schemes are often driven by regulators. For instance, here in Singapore, we have a financial sector technology and innovation scheme, which made back in 2017, I think $225 million available to encourage financial institutions to adopt fintech and RegTech solutions and to be more experimental in adopting data-driven solutions, continue on digital transformation journey. And this scheme was just renewed with an additional top-up of $250 million here in Singapore to further encourage this. And with one of the key changes also giving a bit more freedom for smaller entities to actually be eligible for seeking this funding without having a financial institution backing this from the onset, which is often a stumbling block for very new RegTechs, very new fintechs and new subtechs to really get a footing in this space. The other area where there's a lot of experimentation happening, where there's a lot of RegTech evaluation happening, is as well as even creating new RegTech solution providers. It's really from the innovation labs of financial institutions. And if you look around the financial institutions in Europe, in the US, in Southeast Asia, almost every financial institution has some form of an innovation lab attached to it. Some also have venture initiatives, I mentioned them in the next point, attached to it, that help to build new capabilities, not just for in-house use, but also build capabilities from learning use cases and build and then spin out individual entities. And I think one of the examples that I don't remember whether the talk was already today or is happening a bit later today, is really the ING use case, where they have a setup in Amsterdam, London, and Singapore to create startups in this space with a RegTech focus of taking ideas, taking learnings, doing an internal innovation process with the goal of spinning those entities out and running them as individual RegTech companies, then serve a much greater market. So there's a lot of activities in the space as well. And something that I've seen firsthand to be a key driver for success in RegTech adoption is really this last category here of partnership and venture initiatives. So one thing that I should probably mention is those 5 different bullet points are not mutually exclusive. Often it's a combination of 2 or more of them. So I personally have seen a lot of customized RegTech solutions being successfully deployed by creating a partnership between a RegTech entity as well as 1 or more financial institutions to jointly work and create win-win situations where both parties have benefits from creating a better solution. And what I'm going to do is in much greater detail is I'm going to talk through 2 different solutions that span across those last 3 points, those 3 bullet points here you see highlighted. It's really the first approach is how to move from initial experimentation, a proof of concept, via an intermediate step, which is either a proof of value, a minimum viable product, or a pilot into production. And what are the pain points at each of the individual stages, and how can they be overcome? So I'm diving a bit deeper into this in a minute. And then a bit later, towards the end of the first session, I also look at a second approach that addresses a different need. So the first approach is really catered to having synergies, creating win-win situations between RegTechs and financial institutions, or allowing financial institutions to develop and then spin out new capabilities to form new RegTech entities. While the second approach, regulatory sandboxes, are typically more geared towards allowing regulators to do certain form of experimentation, but also of allowing RegTechs to get early exposure in how technology-driven solutions actually work in regulated environments in a safe place. Then that gives financial institutions more confidence that their solutions will not create additional risks for them, because those RegTech companies might just be too small, they might never have heard about, they have no reputation, they have no financial safety net in order to remedy a situation that actually goes negative. So we focus on the first approach in greater detail, and then towards the end of the first part, I will dive a bit into the regulatory sandbox and give you a bit of an overview of how quickly this space has now evolved and matured over the last 2 years in different parts of the world. Okay, so I try to put some of the success cases, some of the different pathways that I've seen in the slide here. So we have 3 different entities. We have the regulated entities on the left, the RegTechs on the right, and the regulators with regulatory sandboxes here at the bottom. The first approach that really deals with proof of concepts, proof of values, MVPs, pilots, and production is what is here the top half. It's the 3 different pathways that I mentioned before. Adopt the solution as it is. That usually goes through a competitive process. There's some form of bidding involved, where the RegTechs or the FinTechs have to prove that their solution is the best fit for the requirements that the financial institution has, which usually involves some form of proof of value that is usually run within a 2 to 6 weeks time frame, which also creates a bit of a comfort level that a particular entity can deliver solutions. And I've seen this with, in particular, with payment solutions that software as a service style payment fraud solutions go through this process. This usually does not require a change in the way the solution is being deployed or the solution is operated. So that's usually a straightforward bidding process. And what I'm more interested in and more focusing on are the next 2 use cases, either adapting an existing capability or creating a new capability, and what are the corresponding approaches depending on who is really driving the respective approach. Adapting an existing capability usually takes some form of change required. And there are 2 key pathways of what kind of change is required. One case would be taking an existing solution, but requiring this to be deployed on-site, because the respective financial institution considers, for instance, their data as a primary data source, which they would not be comfortable to shipping outside. And in particular, in market surveillance, in the market surveillance space, I see this request coming a lot, and I give you a few of the reasons later on. So this means there's an existing solution, but what we have to do is we have to create the way the solution is being change the way the solution is being delivered. This is really going into this DevOps realm of how can we take something that is being designed to be deployed, let's say in a cloud environment, to deploy within a regulated entity. The changes here, it's not too complex. It's something that's not too complex, too difficult to do. It's really going through that process, understanding how the respective entity does software deployment, involves the compliance teams for all the respective assessments, and so on. That usually happens in 2 phases, running a pilot first, and also to minimize the potential risk of exposure in a more safe environment, and then taking this pilot and moving it over into production. The second pathway here really is working on something where the use case or the data availability or the data accessibility changes, or where there has to be a customized model that is specific to the particular client. In this case, and this is one of the most common cases, is really we would front a proof of concept first to prove that this can actually be done, that we can adapt to this particular use case or the change in data availability, accessibility, or can create a good enough customized model for that respective entity. And I'm going to talk through some of those challenges in those respective stages on the next couple of slides. How some of those customizations are justified, or what is really the underlying cause of it, and the respective complexities. And the last pathway here is really creating a new capability. And again, there are the different approaches that I've outlined in the previous slide. Is really partnerships, again, going often through a proof of concept by pilot and production phase. And that's typically driven the solution owned by the RegTech entity, and then the regulated entity is kind of the premier solution provider or an early beta tester, to get usually some preferential access onto the capability that I help to co-develop. And innovation and venture initiatives are very similar, but what is often the difference here is the phase that follows the proof of concept. Instead of doing a pilot and moving easier to production, we are building a minimal valuable product that actually becomes one of the key assets of the RegTech entity. And if it's an innovation initiative, this would be initially owned by the regulated entities and later spun out. If it's a venture initiative, then it's usually a RegTech entity with a big stake by the regulated entity, and then creating an MVP and moving it into production. The second pathway, the second approach that I refer to is the sandbox approach that was discussed here at the bottom. And in addition to the sandbox approach, there are also in some jurisdictions alternative approaches where, which was mentioned in one of the earlier sessions this morning in the local context of Singapore, where some regulators, for instance, IMDA here in Singapore, has devised a certification process where the regulators trying to give some recognition to RegTechs after a thorough assessment of the technical capabilities, the independent technical assessment, the security assessment, a performance assessment of a particular solution, and then giving kind of some form of certification that gives a RegTech recognition, builds trust, and giving access to certain types of service or business. For instance, government entities are locally here encouraged to use certified IMD certified services first before they look to other entities. Before they look to other approaches. And the RegTech sandbox approach is typically to test and validate a new solution, apply for sandbox access, go through proof of concept or proof of value, and then get some form of a certificate of approval, or otherwise get some learning experiences, have a bit of a cooling down period, which depends on the different sandboxes. In Singapore, it's a 3 months cooling down period before you can try again and implement your learnings and see whether you pass sandbox for the next time. Okay, so let's look at this first approach: proof of concepts, proof of values. How do we move them? But let's say, how do we create them in the first place? What are some of the key challenges? Once we have created them, how can we move further towards production? And there's a lot of challenges, and there's a lot of statistics around of a large number of proof of concepts never seeing the day of light, just not moving forward. And a lot of it has to do with the key points that I'm trying to raise here is that the initial setup, the focus, the team composition, or even the approach was not done in the best possible way. And there are 3 key activities that need to be followed. One is really running actual pre-framing before you start thinking about even conducting a proof of concept. Then that's really leading a proof of concept and who's really involved in this proof of concept. Often, if it's a data-driven exercise, it's heavily driven by data science and data engineers, but that's typically not the best approach. And yeah, I'll give you a few learning points for this as well. And then how do we move and prepare for productionization? And there are different objectives, different outcomes, different goals that we have at each of the stages. Really in the pre-framing, it's about understanding what are the key use cases that the financial institution has, where executives and stakeholders later on can actually be convinced, yes, this is something valuable to us. There are sign-offs. There is some form of business value if you think back of the earlier diagram there. So having other stakeholders, typically non-technical, more executive stakeholders involved, and pre-identifying before we start the proof of concept, what are actual evaluation criteria? What does success look like at the end of the project? And then leading a proof of concept, in particular, if you have some form of partnership, venture, or innovation initiative, is involving the right people, not just letting the data scientists or a consulting entity or a partnering RegTech take the lead on this. Typically, this involves the internal team. And one of the key learnings that I've had, and I've seen this with success many times, is that the knowledge transfer at this stage and involving the right people, non-technical people at this early stage, is key for moving beyond proof of concepts later down the road. In particular, it avoids making some decisions at this stage that will later on hamper feasibility of moving something in production at all. And then, of course, the objective here is beyond creating a strong team that has all the right capabilities and the right individuals involved, is having the objective to validate that the solution is actually good enough for the particular problem. And good enough in terms of, keep in mind, this is a proof of concept. We're not trying to solve every single problem. We're trying to solve that the core problem that we have can be addressed in this way. And then we have to deal with all the edge cases on the path to productionization. And we have to be aware of that a proof of concept does not quickly and easily translate into something in production. And one key ingredients for successful productionization is preparing a proper working environment where all the different stakeholders have sufficient access to it. Because this one goes across a lot of different functions that you have in financial institutions. It involves data architects, it involves IT, DevOps, it involves compliance, organizational processes, risk management, policy evaluation. It involves data security and data privacy concerns and so on. So it's very important that at an early stage, the right people are involved at even during the proof of concept, that their consideration that becomes key in the next phase are actually being taken into account. So a lot of success in adoption here is about mobilizing and coordinating with the various teams and the various experts, not just saying, okay, this is a data-driven solution, let's leave it up to the data scientists and the data engineers to lead a successful proof of concept. If you usually use this approach, your chances of not moving anywhere closer to production later down the road are pretty high. So involve the respective individuals at an early stage. And that's one of the key challenges and key learnings. And that is also covered in the next slide. And the question then here is, who should be involved? And of course, this will be, as the pre-framing discussion or the pre-framing comments have already highlighted this, the decision makers and stakeholders, the actual technical individuals that have to be involved in both the proof of concept and what follows afterwards. The proof of concept is usually driven, the majority of the work happens via data scientists, data engineers, but we also need to involve in machine learning engineers who are later concerned with how can we actually operationalize this. This machine learning approach that has been created in a safe environment with a static data set where we are not exposed to changing patterns of usage, to changing external conditions that have to be catered for once we move to pilot in a production phase, typically spearheaded by machine learning engineers, software engineers, and software architects. So how does a solution we are creating fit into the bigger picture of how we run our IT infrastructure? IT and DevOps staff. How does a particular approach fits into how we deploy software? What are the constraints around this? And this is actually one of the key stumbling blocks that I've seen for a lot of projects, or causes a lot of delays later on, even if there's successful POC that is on its pathway to productionization. How can we actually deliver a data-heavy, machine learning-heavy solution that traditional or even modern DevOps pipelines do not support natively, because machine learning artifacts are different from software artifacts and cannot be deployed in the same manner. And software that is written usually performs consistently over time, while models being trained degrade over time. And this informs how different software deployment and software change management actually has to happen at this stage of where software engineers and DevOps engineers are involved. So ideally, they should be involved early on, that their learnings and insights can be taken into account for assessment, and also their experiences during the proof of concept phase. Key often are also domain experts, in particular if there is certain types of data, for instance, label data, not available to create supervised machine learning approaches. So if you have to resort to alternative approaches where we cannot purely learn from the data, where we have to get a domain experts input on whether we're on the right track or not, and the complexity this involves. But domain experts are also essential when it comes to dealing with a plethora of data sources. And I've seen use cases where we have more than 80 different source systems that are actually being used and or proposed to be used, and that causes a lot of complexities, and the respective domain experts then often need to be roped in to identify what are actually the key source systems to be used in order to create a successful solution. Compliance and legal, and I get back to in particular on the legal side of things in a couple of minutes as well. As I mentioned before, it's one of the key things that should happen throughout the course of engagement. And this is something that I personally have a lot of positive experiences with, is don't just focus on deploying a particular RegTech solution, also start education early. Because a lot of the misunderstandings, a lot of the failures are also often from misunderstanding of why does this not work the same way software deployment works. So typically data scientists are very bad at writing software that performs consistently very well, to really do proper testing, to have a proper version management, because they're just not trained to do that. So often you can train data scientists and upskill them by pairing them with software engineers to allow them to get better at software development, and vice versa. Software engineers usually lack the experience to deal with data, in particular data that arrives at fast speed, at very high amounts, and where we have to make decisions in a couple of milliseconds. A lot of use cases, for instance, in the payment space, you have to make a decision within 5 milliseconds in order to detect or intercept some fraud, or your decision is no longer valuable. And that changes a bit on the use cases as well. And there's a different type of expertise involved in how to build and create such systems, as well as how to manage and deploy them from a IT and DevOps perspective. And we very briefly go to this when we talk about MLOps later on. One other key area is distractions, possible distractions. One of the key criteria, and this is really where the legal side here comes into play, is that a common data and machine learning stack is different to traditional software development stacks and deployment stacks as well. For instance, most of the leading data and machine learning tools are open source tools. And this causes a lot of concerns from a compliance and a legal side. Just answering basic questions is, does your financial institutions even support open source software? Does it maintain repositories? Can you even access the right tools? And that often happens when a RegTech comes into financial institution, has a solution that they've pre-built, that they want to now customize, and then they figure out this, okay, so the libraries that we actually use to build our solution are not even available. The operating system is several generations behind, so that our solution doesn't actually run. Are those repos then cleared for production, or are they only accessible for experimentation? And I've seen this in a couple of financial institutions that innovation centers usually have different level of access to modern software engineering tools than the production side of things. Are libraries licensed are the library licenses approved by legal, or are there legal concerns? So often you have to involve legal very early, ideally at the early stage in your proof of concept phase, to figure out are we even going down the right track, or is this a software that we will not be allowed to use from a legal perspective because the license gives certain rights away, or say we are required to open source a solution if someone asks for it, because there are such licenses out there. So there's a lot of learnings in this space. And is compliance even aware? Because using open source tools creates a lot of additional digital risk. So involve them also early that this risk assessment can handle. Another often surprising experience is resource access. A lot of machine learning solutions, in particular, if it's natural language processing, if it's visual based solutions, involve some form of OCR, so document digitalization, requires hardware acceleration. So now the question is, does your financial institution or your regulated entity even have access to hardware acceleration? Compute units. And surprisingly, and I've had this experience in the last 2 years with 3 of the big financial institutions here in Southeast Asia, the answer was, no, we don't. And then the concern is that the data itself that needs to be made accessible is not cleared for moving into external, for instance, cloud computing premises, that we can actually then take advantage of cloud partnerships with cloud computing providers, which often then stops POC in its tracks, because some of the machine learning solutions are just not feasible without having hardware acceleration. Training times, for instance, can easily increase from a couple of hours to days, if not weeks, if hardware acceleration is not something that is accessible. And then is this accessible similarly in production as well? And one of the other key distractions is often, I briefly alluded to this before, is that there are solutions in place that require a large number of data sources to be used from legacy systems. And often those systems have never been designed, and the data has not been kept in a way that they can easily be integrated. So often it's then you need to work with the right experts early on to single out which of those systems data inputs is really vital to create an initial proof of concept, and then we deal with the rest later on. Digital adopting a RegTech solution is not a digital transformation project, and I've seen this firsthand a couple of times. So challenges at the POC stage. I made it a point earlier on to say is data might be accessible, available, but not accessible. And that's often a key challenge that you face early on at the POC stage. When you decide what is a suitable machine learning approach, it's not just that you have data accessible, but you also have to ask the question is, do we have a ground truth? Do we know whether this particular line item is a positive or negative event? Has a certain base risk assessment. So do we have labeled data available or not? And why this might be available? This might be for confidentiality, commercial, or even secrecy reasons, not be feasible to be shared, even internally. And this happens, for instance, a lot in supervisory approaches, for instance, for market conduct, when there are rule systems in place which try to keep traders honest, but the rules that are being defined should never be made known to the traders. Otherwise, they can easily break them. So why we have guidance of how we create ground truth, we can actually not make use of it, which means we need to look at a different type of approach to build machine learning solutions, which then, instead of relying on data and purely learning from the data, would move into what's called an unsupervised learning approach, and involves domain experts that have to now manually sift through some of the model outputs to say is whether you're on the right track or not. And what is often, why this is technically feasible, and it's a good way of building solutions as well. What is often a key obstacle here is that the time and effort required for this step, for involving domain experts and sifting for the data, is often underestimated, and underestimated by a lot. I've seen projects fail for this particular reason many, many times. So involving domain experts early and having an open upfront discussion about what involvement is really required if we go down that pathway, or not. Can we go back and create ground truth in different ways, either by applying something that's called a semi-supervised learning approach, starting off with a few labels and then learning new labels from the labels, or going through a manual labeling exercise, which sometimes is also more efficient, more effective. Other challenges is really the understanding of what is the difference between building machine learning models, data quality issues, creating a proof of concept with a particular assumption or a view of how data looks like based on the data set that was provided for this activity, and then not understanding that in production, the data that you see might actually be different. And I've seen this a couple of times with use cases where, let's say, they were built for a particular part of the world and then shipped to a different part of the world because they work very well. And then the same data set, the same data is being used, but the quality of the data significantly differs, which now makes the solution completely kind of what was earlier mentioned, the rubbish in, the rubbish out solution. And sometimes there are really surprising reasons for why data quality differs across different parts of where financial institutions or institutions operate. And in this particular case I have in mind, it was really that in some parts of the world, there was an incentive for clients, financial incentive for clients to provide high quality data, while in other parts of the world, this incentive was abolished. And this created a deterioration of the data quality, which made the solution infeasible to be used in certain jurisdictions versus other jurisdictions. And this information was just not aware to the stakeholders as well as during the proof of concept. So that's often something to keep note of as well, that not all the systems, even if they operate the same way, generate the same output. And model performance expectations is also something that is often a key concern. It's really, if you build machine learning solutions, a machine learning solution will never perform the same way a software solution performs, because in software development, you have a consistent way of how you tackle a problem, while in a machine learning approach, you always have a certain uncertainty factor to take into account. And model performance degrades, in particular, if you deal with negative use cases. And one of the things that keeps me excited to work in, for instance, the payments fraud is that as soon as you roll out a new solution to mitigate a new fraud pattern, the fraudsters immediately get feedback. They get disintermediated. Their fraud approach doesn't work anymore, which of course now means they're trying something else, which now means already they're not going to go back to the same approach that they now know, okay, we're being caught doing this. And then your model performance automatically degrades because you're now seeing different patterns emerging that you have not been trained for, that you don't know, is this a good or bad behavior? So managing model performance and keeping models performing above a certain threshold is a key problem that needs to be addressed, and that's one of the key motivations for this ML ops area. Yeah. And very briefly, to give you an example of the challenges after a successful POC. So this one here is a snapshot from a project using completely open source data of creating a fraud solution. And if you just look at those two images, on the left-hand side, we're using a traditional method, and with the objective, you want to separate the blue from the red. The blue constitutes genuine transactions, payment transactions, and the red are fraudulent transactions. And using a machine learning approach, in this case, it's a deep learning approach, gives us a very good separation from the red to the blue, with a few red spots here in the blue and a few blue spots in the red. While in the fraud fighting spaces, we will never get rid of all the fraud. So this would be a feasible solution. So now what happened when we move this into production, or actually when this in a real world data set is, we got something like this here on the right hand side. Why this at first glance looks not that great anymore, it just means is that we have some additional learnings that we have to take into account during the pilot and production stage, that the data set that we used during the proof of concept had fewer patterns that constitute fraud than the actual production data set. So here, if you take a close look, you still see different types of areas where the red and the blue is physically separated. So you can still use a separate machine learning approach to separate the blue from the red, but it's a different approach that you would use by just looking at the output from the POC result. So often rethinking and keeping an eye on the metrics and what matters for production approaches during the piloting stage is actually important. So just very briefly to wrap up this part, expectations that need to be aligned after production is from a technical perspective, as I just highlighted with the previous example, or also from a budgeting perspective. Often what is underestimated is that the POC is not even halfway there. POC just proves that the overall concept is right, but then there's a lot of other complexities that come in. And from a budgeting, from a timelining perspective, there will be a significant increase once we move past it. POCs usually are framed in 12 to 16-week time frames. And the budget and the timelines, usually they triple at least afterwards, as it's confirmed here also in this example, which is from a publication that develops solutions that are face recognition based. Similarly, what I briefly mentioned is we have to keep an eye on performance. Performance during the POC, during testing and training is usually your peak performance. Afterwards, once you move into production, your performance won't be as great, and you have to expect performance to degrade. You will see use cases that the training, machine learning training approach has never seen, so that it can not actually respond to when you actually move into production. And then adapting to a production environment. In a proof of concept, it's a very restricted, isolated environment where often your data arrives in a batch document. In production, you have to deal with data lakes, data streams, or APIs, and each of them might have different constraints in terms of access, usage, or compliance restrictions of what you can do with those systems at a particular point in time. The training needs to happen continuously, not just one-off. You typically in a software development solution, you create a solution and then you deploy because it consistently performs the same. In a machine learning solution, you're continuously learning. This gives you the advantage of adapting to new behaviors, but it also means that you've probably never seen enough, never covered the entire spectrum of possible use cases. And in the real world, we will never be able to anticipate all possible use cases in advance. So we have to have machine learning environments that can have some form of a life cycle deployment, a life cycle support. And we very briefly touch on MLOps in a second to talk about that. Yeah. So the second approach that I just want to very quickly mention and give a reference point to it is that comes to the benefit of, in particular, RegTechs, is to provide safe environments where new solutions can be validated and some form of certification can be achieved in order then to have conversations with regulated entities about deployments. So this is really to live test new products or services or new business models in a time limited and scope limited basis to determine appropriate regulatory treatment, which means it can be somewhat safe. It's not necessarily a stamp of approval of this meets all compliance requirements, but at least basic requirements are being met so that the respective entities have a better confidence that this RegTech, for instance, knows what they're doing, and it's somewhat safe to operate with them. And this slide here is from roughly a year ago, a bit over a year ago, June 2019. There are 59, if I counted correctly, 59 different sandboxes identified, so 59 different jurisdictions, with 5 of them that were already in operation. There are 29 listed here that were operating at the time. And yeah, so it's something that regulators have started to move towards and rolled out in different forms, either supporting innovation, validating policies, having very thematic approaches to tackle certain issues that they are aware of, for instance, KYC-related, QR code payment-related sandbox or so on, or even setting up sandboxes to foster cross-border collaboration, how different regulators, jurisdictions, or authorities can actually work with each other. Okay, so let me look at the Q&A. Okay, I answered the 3 questions in the box, because we're running slightly behind afterwards in the system. So let me jump to the second part, where I want to talk very briefly about MLOps, which I just mentioned is that the way software is being deployed versus the way data-driven and machine learning-driven solutions are deployed is fundamentally different. And this has brought about a new area which is often referred to as MLOps, machine learning operations, and as well as kind of machine learning, or often also called AI platforms, that have very strong MLOps support. So what is this all about? DevOps really has transformed most of the industries over the last decade. So DevOps is really an approach to continuously develop, integrate, and deliver software solutions. Provide quality assurance in terms of software control, fast-paced adaptive development in terms of agile development, allow to deploy infrastructure, in particular cloud computing infrastructure, just by writing a few lines of code, setting up very complex network security policies, and so doing configuration management instead of changing software directly, which is something that can be much easier done and applied to production environments. And DevOps has been very well adopted by financial institutions, but as well as a lot of other different areas. Telcos, for instance, and retail spaces are at least on par, or if not ahead, with financial services institutions. So what this industry report card, which is from earlier this year, says is that why financial institutions have taken to DevOps, and DevOps is very much welcomed by compliance and risk management teams, because it kind of gives the ability to assure repeatability and gives an automated audit trail of what actually happens. So it aids compliance and reduces a lot of cost and headcount in order to investigate what's going on. There's a lot of room for improvement in terms of making those DevOps capabilities more mature, in terms of speed and of development and delivery. And this is emphasized here on the right-hand side by the slide, where that is why financial institutions have an ability to deploy on demand. So 42% of financial institutions have this ability. In the real world, most of the software is still developed and delivered in more ad hoc scheduled timeframes. So the change is applied once a week or 3 times a month, instead of fully using the ability that the DevOps pipelines give to do this on demand if and as required. So moving really to a more mature level of DevOps is still something where a lot of financial institutions can benefit from. So the key point that I want to make here in this section is how is software development different from machine learning solutions, and why is the DevOps domain, which is very well understood and supported by IT and DevOps divisions inside financial institutions, not sufficient to support data-driven and machine learning based solutions. And this really has to do with that they're both trying to solve different problems. Software is explicitly programmed. You provide instructions of how a particular input is to be processed, while a machine learning approach gives you an input and an expected output, and the machine learns how to get from one to the other. And of course, the more diverse your training data set, the more of those possible pathways it learns, but it will never learn everything. And in most areas where machine learning is applied to, you have kind of an open-ended world where you can never expect how a negative entity is going to behave itself. You can never anticipate all possible ways how you can introduce fraud into a payment system. You cannot anticipate all possible ways how a trader can misconduct him or herself in the market. But a machine learning approach can continuously learn what are new patterns, what are new approaches that are being witnessed in production, while software would always have to be rewritten to do this. So there are different kind of problems, different kind of scopes, which also means there are different approaches of how they have to evolve, be able to evolve over time. So software usually evolves outside of a production environment, is being written, tested, trained, and then deployed, while a machine learning solution has to be continuously evaluated in terms of its performance during production, and ideally has to have the ability to retrain itself in the production environment using the live data, not just an artificial data set. And that one is one of the key criteria of or the key characteristics why DevOps solutions typically don't work, because the artifacts that need to be deployed, the kind of monitoring that has to be done during production is not supported out of the box by DevOps tools. So that's a new breed of those tools that are called MLOps, which from a very high level perspective, add two different capabilities to the DevOps domain. They enhance existing capabilities like continuous integration and delivery, and then they add on continuous training so that you can continuously train within a production environment, that you can learn from new data SCCs, as well as continuous monitoring, that you understand how certain performance characteristics are changing. That might be a change in the way the data comes in, suddenly data quality goes down, or the data looks completely different, like the COVID-19 situation devalued a lot of machine learning models that just stopped performing because we've never seen those data patterns. And then how can one assess a model to identify whether it's still performing adequately or not, or when does the model have to be retrained, and then triggering this retraining ideally within the production environment, and if it's not possible, then outside, and figuring out how to actually deploy this. Yeah, and you get those machine learning, the machine learning ops solutions built in a lot of machine learning platforms, and you get those platforms online as well as offline. Online, some of the key solutions, so cloud-based would be Google AI platform, Microsoft AI platform, AWS platform, H2O.ai. And then offline, similarly, there's H2O.ai, Google AI platform. Also allows an offline operation mode. And then there are plenty of different platforms that facilitate the development of machine learning projects from ideation to production by explicitly supporting an experimentation environment where you can test, develop, and prove hypotheses. So your proof of concept, have a deployment layer which contains DevOps and MLOps, and having then the experience layer where you can create meaningful user interfaces. So there's a lot of movement, a lot of development advancements in this space. So for the last couple of minutes, I want to point to three main things that I've seen, and in particular over the last 2 years in RegTech deployments or subtech deployment environments that affect the success. And one of this is, and we had discussions earlier about this today, is really the shifting data privacy landscape in itself, which is really different privacy legislations coming out, the GDPR being in effect now 2.5 years, updated privacy policies in China now since the beginning of the year, the California Consumer Privacy Act in effect, and so on, as well as different guidance documents by either regulators or governments. Regulators in terms, for instance, in the case of Singapore or France, currently under discussion. Okay. France under discussion, so different different guidances of how machine learning, certain types of machine learning solutions should be used in order to have certain confidence and certain transparency in the way machines make decisions, and holding machines to at least the same standard human decisions are being held to. And this relates to one of the fundamental problems of modern machine learning approaches, so-called black box problem, which means that it's often not possible to identify why and how a machine makes a particular solution. So there's a lack of explainability, in particular with this new breed of machine learning solutions, which fall under the deep learning domain, neural networks, where a lot of the high-profile news that you've read over the last 5-6 years have really resided from. So it's an inherent problem to this type of approach that we don't yet understand from a theoretical, mathematical, biological, physical perspective of why do they actually work so well the way they work. And just to give you a very brief example, here's why even supplementary approaches to try to find explanations using technology is not necessarily be the best and always the most successful approach. Look here in this picture where you try to identify which object, which animal do you see. So it's a husky, a Siberian husky, and in the center you have a machine identifying the Siberian husky, and highlighting the pixels, color coding the pixels that have most contributed to making this decision. While on the right-hand side, you have now the same image with a completely different prediction. Here it says it's a musical instrument, a transverse flute. And if you now look at which pixels now did it actually look at and take into account for making this decision that this is a transverse flute, a music instrument. And there's a big overlap between the pixels it actually looks at for Husky and for flute. So confidence in terms of having a reasonable explanation to justify that this is right versus this is wrong, and why does it even try to make this prediction that this is a transverse flute is something that is a big challenge today. And you see this in a lot of different domains. Why in computer vision it's still intuitive for us to make those assessments, to validate that this is right, this is wrong. In a purely data-driven world, if you deal with a lot of high velocity data points, you don't have that ability anymore. There's just too many complexities for someone to make that kind of assessment. Yeah. The one point that I want to make about data AI and data ethics frameworks is there's plenty of frameworks being proposed. It's usually discussion documents, guidance documents, a lot of debates being held of how should we constrain machine learning and AI solutions. But what I personally see missing and what will have the biggest impact in developing solutions in the space is really a practical and hands-on examples of how to convert what is being asked for in those documents into actual practice. Why I see a few emerging discussion papers, for instance, I just highlight one, the paper that was pushed out by the Bank of France in June 2020, which goes to much more detail in terms of what would actually be expected by the participants and how would there be a different experience for the different participants in terms of what a technology solution should deliver, what a machine learning solution should provide in terms of explainability, in terms of instead of just saying very high level, we want to have explainability, we want to have transparency, we want to be able to understand why a decision is being made. We want to allow the consumer to inquire of why he's getting offered one level of benefit but not the other. And to come to an end, one of the most exciting areas that I actually see in the space is really addressing one of those biggest problems that I mentioned earlier on. If you remember this curve where we had business value versus complexity, in order to tackle the high value, the high complexity cases, I already mentioned that collaboration is key. Collaboration is also key for addressing the money laundering problems, identifying ultimate beneficial owners, not just collaboration within financial institutions, but across the ecosystem. Because a lot of the external data points and data sets are being required. But what is happening is there's a new breed of technology that is maturing very quickly, and the COVID situation has actually benefited this technology to mature faster because a lot of contact tracing deployments using this kind of technology as well. Is the area of privacy preserving data analytics and machine learning, which really allows data exchange without seeing the underlying data, computation on encrypted data without ever having to decrypt the data. So that gives a lot of security and privacy guarantees. And it's an area that if you're interested in the space, I would really recommend you to take a look at. And it also addresses some of the problems that today's machine learning solutions to have. Today's machine learning solutions, they potentially leak information about the training data set. So there have been what's called model extraction or inference attacks or membership attacks where you reverse engineer the training data that was actually used during the training exercise, which can potentially include PII information, which would be a huge disaster for anyone deploying such a solution. And having privacy preserving capabilities would allow you to develop models that are not subject to this type of attack, or that you can provide anonymization techniques that can never be reverse engineered with a high level of confidence. So this is something that will the fundamental building block to move towards more collaborative approaches, but similar with a lot of other approaches, technology alone will not be sufficient. But I already see a lot of regulators taking a different stance, taking a different approach to how to do enforcement for negative entities. For instance, the July decision that was made in the European Parliament to now give stricter enforcement capabilities to the European Central Regulator, enforcement over the local jurisdictions, which is one of the complementary steps that is required to move forward if you ever want to get a handle on money laundering. And if you're interested in this space, privacy preserving machine learning, I would encourage you to take a look at this. Yeah, it doesn't show up here on the screen share. On this video introducing the private AI series. It's a community activity that is has already a very huge following, which is in early January 2021 releasing education and training materials in understanding what the potentials and the opportunities are in the space. Thank you. Yeah, I've responded to the questions through the question answering system. And then if anyone would like to have a copy of the slides or any follow-up questions, you find my contact information on the last slide.
Great, thank you, Markus. Thank you. It was very interesting, and I hope a lot of people are now a little bit wiser about how machine learning can be applied and where we are actually with use cases and what still are the hurdles or the challenges. But on the other hand, that we are already much further than 2 years ago when this was still very much in the infantry, right? So and that leads me also to okay, we are going for a 5-minute break because everybody has of course listened for 90 minutes to this workshop. But after that, we definitely are going to discuss a little bit more with industry specialists about vendor management and the challenges that are out there. So that is really pretty much based upon this workshop that we are going to see what we can can discuss around that topic, which is for myself very interesting, being a startup and would like to do some business with large incumbents or other industries that already heavily either regulated or already relatively traditional, having traditional processes in place that well, maybe not so quickly can change, and maybe also are not so interested in little startups. So that is definitely the discussion we're going to have. But for now, 5 minutes break. Thank you very much, Markus.
Thank you.